Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for Thursday, November 5th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for. And I will leave a link to their site in the description box below this video. Today, the S&P 500 was up 1.95%, and we closed at 3510.45. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. This first chart that we're going to look at is just today. So this is a 1 day, 1 minute chart of the S&P 500, where each candlestick does represent 1 minute of trading. And what we can see here is we, of course, had a pretty nice rally in the early part of the morning there and made our peak of the day just about 35.29. You can see 35.29.05 was the ultimate high, and that came just after 10:15 in the morning. Sold off until about 12:30 and then had a rally into the afternoon. Now, the reason for these arrows is that at 2 o'clock, this was when the Fed announcement came out, as if we didn't have enough going on this week, right, with the presidential election, which is still, undecided, right? We don't know exactly what's going to happen there. But then today we had a Fed announcement, right? So the Fed meeting, and of course, as all of us expected, they left rates unchanged, and then at 2:30 this afternoon Eastern Standard Time, which is why I have this arrow in this box. This is when Fed Chair Jerome Powell had his news conference, and I just wanted to point out that what we can expect, and this I've been paying attention to this for many, many years, is that anytime there is a Fed meeting and a Fed announcement, and the Fed takes questions from the news media, there's always volatility in the afternoon, okay? And that's why I have this boxed off. So this area here, this time frame from 2:30 until the market closed at 4 p.m. Eastern Standard Time is when we saw this type of volatility, and for the majority of this time, Fed Chair Powell was taking comments from the news media, and then of course after that conference closed off, then the news media was commenting and parsing every nuance of his words and their notes that they took from those meetings. So just wanted to share that with you, that in case you don't know, when the Fed does make these announcements, and it's generally at 2 o'clock in the afternoon, and then they take a conference call starting at around 2:30, generally we'll get quite a bit of volatility in the afternoon whenever that happens, and that was the case today. But still a really nice day, another really nice day in the stock market, up 1.95% on the S&P 500, again closed at 3510.45. The next chart that we're going to look at here is a 5-day, 5-minute candlestick chart of the S&P 500. So this is just the last 5 days of trading. And guys, the first thing I want to point out is that we're up over 8% on the S&P 500 since the lows on October 30th right here in the afternoon. And you can see the other thing that's been happening is we gap up at the opening. So we gap up at the opening, and then to a large degree, in a lot of these days, we're trading slightly sideways, but we're experiencing a gap up every day over the last 5 days. And so, super bullish market. And so we're up a lot over the last 5 days. We're back above this 34.20 support level, and if you saw my video from last night where I showed the downtrend that we had been in since October 12th, obviously we're above that now. We broke above that yesterday. We broke above this 34.20 level, where we closed there yesterday, and of course today again. And so as long as we stay above 34.20, there's really not a lot to worry about. But if we do break below 34.20, then the next area of support, we will go back down to this 33.30 area, would be the most likely scenario. But I wanted you to see this 5-day, 5-minute candlestick chart so you really understood just how the market has just been gapping up and gapping up and gapping up and gapping up at the open, and the fact that we are up 8% in basically 4.5 to 5 trading sessions. And to put that in perspective, the long-term average annual return of the S&P 500, going clear back to like 1970, is about 10% a year, okay? So we've got 80% of an annual return in the S&P 500 in the last 4.5 to 5 days, okay? So just, it's not going to, guys, it can't do this every day. That would be virtually impossible, all right? So we've had a stellar run, especially in spite of, in thinking about all the different things that have happened this week, with, of course, Tuesday the 3rd being the presidential election. We still don't know the exact results there. It's looking, like Biden's going to be the next president, but we still don't know that, right? We still need to get the definitive answer. But when you include all of this, it's just been an absolutely stellar run. So we should expect at some point to get some type of a pullback and consolidation. And at this point, the most likely near-term spot to pull back to would be 34.20. The next chart that we're going to look at is an hourly chart of the S&P 500 going back to August 24th. And the reason I started it there is I wanted you to be able to see these peaks, okay? So what we're seeing here, at least what I'm seeing in this particular chart, this hourly candlestick chart of the S&P 500 that basically goes back about 3 months, is the 3 lower peaks in the S&P 500. Now, this counts today, of course, but, and we might keep going, but we've had this parabolic move, as I just pointed out, up over 8% in the last 5 days. So, we're probably going to have to at least consolidate, if not pull back a little bit here over the next few days. That would just make sense. But back on the 2nd of September, of course, we had our all-time closing high. I just abbreviated that ATCH for all-time closing high on the S&P 500. That was 3580.84. That was on the 2nd of September. And, of course, we sold off and then hit this low point right around 3210 on the 24th of September, had that rally that peaked on October 12th. And we closed on October 12th at 3534.22. So right there we have a lower high, okay? And then today, now I know we could go higher tomorrow and Monday, Tuesday, whatever, but at least for now, for today, we closed at 3510.44. So what we have here is a series of lower highs in the stock market, at least potentially. So we need to keep our eye on this and see, are we going to roll over for a few days or longer, or does this market just continue to power higher? None of us know. I don't know, and we're just going to have to keep our eye on it. But from a technical standpoint, again, as I just pointed out on the previous chart, 34.20 is a very important support area that really started on the 24th. So it's kind of a good thing I started the chart right there. But 24th of August was the first day that we ever breached above 34.20 on the S&P 500. And you can see that it's been, for the last 3 months or so, been a very important support and resistance area on the S&P 500. So that area of support, 34.20, isn't that old and isn't that strong, but it is our most near-term support level on the S&P 500. So if we do pull back here, we need the market to stay above 34.20. And as I already pointed out on the previous chart, if 34.20 doesn't hold in the case that we pull back, then this 33.30 area would be the next area of support. And 33.30 has been a very important support and resistance area since clearback in January. And if you want even more information about how important this 33.30 level has been for the calendar year of 2020, you can check out last night's video and or other videos from the last couple of weeks where I've talked extensively about these support and resistance levels in the S&P 500.